Hello, everyone. Happy to be back with another young Indian. Right now, we have with us Sanath. Let's listen to him. Over to you, Sanath.
Yeah, thank you, Subodh sir, for giving this platform to speak. And it's really my pleasure to speak on this platform. My journey into economics has been quite an interesting one. It started during the COVID-19 pandemic in 2020. I usually wasn't watching a lot of news, but in COVID, there was so much news and it was so much hyped out around. So you naturally have this tendency when you are having a lot of time, right? So in COVID, there was lockdown and you were stuck at home. So you had a lot of time. So you naturally have this curiosity of exploring things out. So one thing I never understood was my dad was usually watching these news channels like CNBC and ET Now, where they talked about the stock market and the trending things in the financial markets. So I never understood why it was so essential to learn about all these things. And usually the news channels have these colorful pictures and all the numbers that's moving around and the graphs that go up and down and green and red. So I never understood that. But as I started to learn more about those in the COVID time, it was very hard at first to grasp all the concepts. But as you pay more attention, I guess, you tend to learn a lot of things. And so that made me take economics in high school, where uh, I learned the subject for the first time. And it was very different from what I had seen in the news channels, right? So it was very academic, and you have supply and demand, there's an equilibrium, and all it was very academic language as such. So um, that still I persisted learning more about it, and it was mainly because I had this habit of reading as a child. So I read lots of fiction, and then I started reading non-fiction too. So it made me more interested in economics as a science, right? So I took up that in my undergrad. I'm currently pursuing my economics degree at Symbiosis School of Economics, and I'm in the last year of my undergrad. And it's been a wonderful journey, I'd say, uh, learning lots of concepts and going through different kinds of, let's say, um, learnings about the market and how to invest and stuff like that. So, as I was reading more about the subject, it struck me that economics was mainly dominated by the neoclassical schools, right? So they are mostly into thinking of economics as a science and not as a art form, or you know they are mainly into this concept of equilibrium, and how they um, think of it is through statistics, right? Econometrics and all such things. Those things really didn't work in the markets. So when I first started uh, tracking the markets and sort of uh, learning how things worked in the market, it didn't really, I didn't really find that equilibrium sort of thing that most economists talked about, right? So I was a bit confused, like, did I choose the wrong subject or something like that? So I read more about the subject, and it was through research, I guess. It made me more. It gave me more clarity about the field as a such, because you don't learn through classes the interesting stuff, right? You When you explore on your own, you learn more in depth, and also the more interesting concepts that usually are reserved to PhDs and their domains. So in I never really liked the classes as such, but our college also emphasized a lot of research. So we had a lot of research projects that we had to do, and each subject had sort of presentations and research projects as an internal component, and that made me more interested in finance as such. So more about the um, market as such. I learned that people don't value assets just based on their fair market value, right? So people also have this tendency of herding towards one asset just because that's the trendy thing, right? So people bet more and more, and the price goes on and on. So it's like a bubble, right? And eventually that bubble will crash, and you lose money on that. So based on that, um, I was reading a lot about different stuff, and it struck me that I have to do some sort of research into this thing, because we also have a dissertation in our college, and we have to complete a full dissertation project within the end of this academic year. So based on that, I read more about it, and I'm starting to do it, and it's really interesting, and it's an curious project that led me to led me more into finance as such. One more thing that I'd like to talk is about the things that are going on in Indian economy. So mostly I see that the demand is very weak. Right? So it's mostly coming from the upper middle class and the rich families, where the luxurious sector is growing very fast. So all the let's say demand for expensive watches or luxurious housing, they are growing at a very fast pace. But the middle class is getting squeezed out, you can say, and that's really a problem, because middle classes are the ones who pay taxes, right? The rich have chartered accountants, and they evade taxes very easily, and the poor don't come under the tax bracket. If you look at the wealth inequality that's been growing in India, to better understand it, I think we should take a perspective of the wealth that has been concentrated in each of the classes. So the rich invest mainly in businesses, and those businesses they can control. So they hire people at lower cost, and they sell their products at higher prices. So they earn that profit, and they invest that profit again in the businesses. The middle class don't invest in businesses. They invest in mostly properties like houses, right? That's the main source of their investment. But the houses don't give you as much return as capital gives you. So they don't earn that, they don't catch up with the rich, right? So there's a growing gap in that. And in the lower sections, it's not, um, let's say, they don't invest, right? So there's no concept of saving as such. So this middle class is getting squeezed out, and the upper middle class are spending more, and that's a leading problem, because um, these people are getting squeezed out also due to technology, right? So AI and all those things, they are um, basically replacing all the repetitive tasks which the middle class used to do, and uh, ge- uh, they are also getting laid off. So um, these middle classes don't have money to spend. They are also facing a affordability crisis, which will lead to lower demand in the economy. When people don't demand more, the economy tends to slow down, and that's happening in India right now. So recently, the growth rates that were given was very low as expected. It was expected around 6.7, but it came around 5.9, I guess. I don't remember the figures exactly, but around those time. So that's about it. And end my video.
I
Sorry.
read that you are doing CFA. So tell us about that.
Yeah. That was basically my interest in finance. So I found this out when I was reading the Intelligent Investor book, and it was Benjamin Graham who first proposed to form a association of financial analysts and make it a proper profession as such. So I found out it was very interesting to be a part of this association. So there are three levels to it, and I've cleared the first level. So uh, I found it very interesting to learn more about finance through it.
Hmm. So what are you going to do with, suppose you pass level 3, then what?
Well, it's also uh, about monetary gains, right? So people who do CFA earn a lot,
Hmm.
and it's mostly in the investment sector, right? So all the active portfolio managers and um, investment bankers, they earn a lot because they provide financial services which are really very hard and very competitive in nature.
Hmm.
So I think competition is a very good thing because it keeps you active in some sort, and it makes you very productive in that case.
So is that your aim to get CFA 3
Yeah, I'll try in each year.
each year? So it'll take, how long will it take?
It would take around 2 to 3 years.
Really? So you have to self-study for it, or how do you study?
Usually people self-study. There's no uh, particular resource as such.
Hmm.
So the CFA Institute releases their materials about what all topics are there, and usually people self-study
Hmm.
and they crack the exam.
Okay. All right. Anything else that you are thinking of in the future?
Well, I think finance has a lot of scope
Hmm.
in the future, especially in India, because
Hmm.
lots of financial services
Hmm.
have been outsourced to India as such.
Hmm.
So all the developed nations like US, UK, Europe, and all, they are outsourcing the uh, you say like the analysts work to India because they can get it at a cheaper rate in India.
Hmm. Hmm.
So India has a really good potential to um, provide those jobs, right? So those kind of services will really increase in India,
Hmm.
and I think that's the right path to take
Hmm.
because you are basically allocating capital to the right resources
Hmm.
and the right businesses.
Hmm.
So finance plays a major role in the economy.
Hmm.
I guess. Yeah.
And what about within India? How is the financial sector doing?
The I would say that lots of FIIs have been selling in the recent months, mainly because they don't see they see the growth slowing down, as I talked about it. The middle class is spending low, so the growth is slowing. So they don't see that much growth, and they've been selling off the um, stocks and bonds,
mm,
mainly in the financial sector.
mm.
And I guess it's cyclical, right? So financial sectors are cyclical, and they're sensing that India is at the peak, so there's a recession coming. So they're pricing in
Mm,
all those
mm,
stocks.
mm.
So they're selling off those things.
Okay. You said something that, look, the middle class don't invest, but they have savings, right?
Yeah, they save, and they save mostly in FDs and um, safe assets, you can say.
Okay, fine.
And there's also been a boom in IPOs, right, recently in
Mm,
India.
mm,
So mostly middle class, like even if I see in my college, mostly they like to put in IPOs, right, without checking all the financials and all. If
mm,
they see a good GMP, gray
mm,
market premium,
mm,
that's like the premium you get once it's listed, they invest, right? So that's a lot of gains at the first day.
mm, mm.
So they want that quick money to come in their bank accounts.
Okay, fine. So these savers, they are not investing in startups.
No, they are not investing. That's mainly coming from the upper middle classes where they have a lot of wealth, and they're moving their money from the active stock market towards private credit and private lending and
Mm,
startups as such.
okay. Now, do you think we have enough instruments, financial instruments? I'm now talking technical, okay? Financial instruments to provide uh, equity investments at risk adjusted rates, but coming from savers. The savers don't want to take the risk, but they have the savings. How do we get it to those who are risky? What's the channel?
Like the risky investment towards the middle class.
Yes. How can we get the
Well,
savings of the risky? How can we get the savings of the risk-averse middle class to finance the risky investments of entrepreneurs?
right. So there are passive investment instruments like index funds
Mm,
and
mm,
also uh, mutual funds
mm,
which offer a broad range of assets like
mm,
flexi cap funds and hybrid
mm,
funds.
mm,
But they are also um, usually invested by the middle class. I would say middle class are starting to invest in that.
mm.
But a more better alternative would be ETFs because they are tradable and they are very liquid, and they also offer good returns in 2 to 3 years.
Okay.
So they are a better
Okay.
way to invest.
So you're basically moving into finance now.
Yeah,
Yeah, it's a good area to move into. I'm happy that you are doing that because we do need people, young people like you in finance. And unfortunately, most people in the world don't understand finance. It's true everywhere in the world that nobody has any understanding of finance, and the colleges don't really teach it. Whether you are
yeah, yeah,
they really don't teach finance. It's not just in econ. You go to IIT, they have no clue of finance. You go to any other engineering college, they have no clue of anything. So it's a sad situation where we don't teach finance. But I'm glad you are doing it. Anything else you want to add here?
yeah. I would like to add on to your point. It was I found out while reading a lot that the financial crisis of 2008, it was not predicted by most economists, right? And that was basically because they didn't understand finance as such. They didn't understand all those subprime mortgages and all those synthetic instruments that was being traded. But the finance professors, they understood it, and they tried to tell them,
Hmm.
but the mainstream economics that was dominated was the neoclassical economics, right? So they didn't allow those alternative schools of thought to come in. So that was basically that. And yeah,
Well, I think that's not exactly right. I mean, economists understand finance. They didn't think that a problem, and they knew there is a problem. Okay. But what they did not know is how it will explode through the system. That is where to say, obviously everybody understood synthetics. This is not an issue. Okay. PhD economists understand synthetics and derivatives and all this. They just didn't bother about it because they think it's not going to, even if there is a fallout, it's not going to explode through the economy. So and even the finance people, they didn't think that either. They are experts at the instruments, but they're looking at their narrow field of the finance. They're not looking at the big economy. Those who are looking at the big economy, they think, oh, it's finance, it's okay. It's on its own. Let it be. It's not driving us. So the gap really in understanding was how important the financial sector is to the daily workings of the economy. Yeah, everybody knows derivatives and options and call and put. All these things are no big deal. To I mean, I even used to teach it, so it's not something that's beyond anyone. But what is beyond, what was really missing was that this is so crucial. That this is so crucial that it should be very carefully monitored. Okay, they are misbehaving, let them misbehave. What's the big deal? It's the free market, let it be. But then when the fallout came, then the shock was there that, oh my God, we didn't understand how important the financial sector is, not just to itself and not just to those who will lose, but that it will have ramifications throughout the economy. I mean, the insolvency of Lehman Brothers. I used to teach environmental economics, but I told the class, guys, today I can't teach you environmental economics. Today, Lehman Brothers has shut down, and you need to understand that this is an earthquake. Lehman Brothers is shutting down. People can't believe it. But it's very easy to know why they had to shut down. It's not a complicated financial transaction. It's very easy to know. But we say, okay, fine, they'll shut down. What's the deal? Why bother about it? It's just one more company going bankrupt. Okay, fine. What's the point? Anyway, that was the missing. What's the point? And today in India, we still don't have that situation where the financial sector is so critical. Okay. Anyway, any further thoughts from you?
Yeah, so in India, I think that it's not, as you mentioned, it's not that big, right? It's not like too big to fail as in the US. But finance sector has been growing in India a lot because there's a lot of startups and startup boom that happened after 2014. So uh, India also has a lot of unicorns, right? And people like Nikhil Kamath and all those who are in the startup industry are really improving the you can say efficiency of doing things. And so I guess India is on the good growth trajectory, and it will meet its goals by the end of this century, I would say.
Okay. All right. Anything else you want to add here?
Yeah,
No,
I
good. Okay,
had.
good. So thank you, Sanath. It was very good to see somebody deep into finance, and I'm really happy that you are doing it. Let's end it here. I'll be back with another young person or an expert soon. Till then, bye.
Bye.